Hello, good afternoon, everyone. Thank you for joining this session. I hope you all have had a great time so far in this PVC Summit. So, in this session, we will be discussing how global VC investors uh, are gauging opportunities in Indonesia. My name is Andi Haswidi. I'm responsible for the Lightspeed Asia's research and database products. I'll be your moderator for this session. And joining me today are our distinguished panelists who represent global investors with fund allocations for Southeast Asia, including Indonesia. So we have Pinn Lawjindakul, Vice President of Lightspeed Ventures. Hello, Pinn. And
Hello.
we have Sachin Bhanot, the Head of Asia Investment at Prosus Ventures. We have Akshay Bajaj, he's a VC investor at SIG. So panelists, thank you for joining Lightspeed Asia at this summit. If you could please go ahead, introduce yourself, and maybe share a bit of your area of focus and perhaps your portfolio in Indonesia. Go ahead. Maybe we can start with you, Pinn.
Sure. Hi, everybody. My name is Pinn. Great to be here. I head up investments for Lightspeed here in Southeast Asia, primarily looking at consumer and fintech investments. That's been kind of my focus in the last 6 years in the venture ecosystem. Mostly looking at early stage investments in emerging market sectors. Prior to being an investor, I was an operator with Grab. I founded their early stage motorbike on demand business in Bangkok, which is where I'm from. So that's a little bit about me.
Okay. Great. Akshay, go ahead.
Yeah, great. No, thanks. Thanks for having me, Andy. So just quickly, for folks who are not familiar, SIG, we're best known for being a trading firm. Have a fairly sizable market-making business at the core of what SIG does. Something like 20% of U.S. equity option volume goes to our desks. But the founders who bootstrapped the business over the last 25 years have created different investing units to deploy balance sheet capital. So we've got a growth equity team, a public markets team, then here in Asia, a venture group. So I'm part of the Southeast Asia venture team that was started in 2015. We've been investing in Southeast Asia for the last 6 years, investing in venture in Asia for the last 16, and have grown our Asian portfolio now to over 300 companies. And for myself personally, I've been covering ASEAN for the last 11 years, 6 of which have been with SIG. We're really on the lookout in similar sectors, consumer internet, fintech. I think we've also started to see a number of very interesting B2B and SaaS opportunities emerge from the region. So quite excited about that.
Thanks a lot, Sachin. Sachin, go ahead.
Andy, hi everyone. Andy, thanks so much for having us on. I'll keep this brief. I was born and bred in Malaysia. I have spent most of my career in private equity and venture capital. Currently, I help lead the investment team for Prosus Ventures in Southeast Asia. Prosus, we are a publicly listed entity, and we are a permanent capital vehicle. So when we invest, we take we take a long-term view when we invest. We typically invest to hold. We are ticket size and stage agnostic. We are also sector agnostic. We historically did a lot in B2C. Recently, we've also been doing more in B2B, and that's really what we do on the venture side. We have a couple of other verticals as well, which are more strategic and operational. Those would be things like food delivery, things like classifieds under OLX. We have large holdings in education tech, and we also have things like payments under PayU. So that's myself and Prosus in a nutshell.
Thank you, Sachin. Thanks very much for that. So just to inform everyone about the flow of this discussion, first we will do a bit of an overview of what transpired in 2021, and then discuss some of the opportunities that you're looking at in a complex market such as Indonesia. And we'll also be discussing some of the macro trends that may play out and influence the overall landscape, as well as exit opportunities. And perhaps we will close with your thoughts for 2020 and forward. Let me begin with you, Pinn. So Lightspeed Ventures, I mean, you opened your office in Singapore at the start of the pandemic, right? This is early 2020. So I imagine since then, the regional landscape has changed, both good and bad, right? So, but there was definitely a big optimism in the second year of the pandemic, as shown by the funding. Like here in Indonesia, record high funding in Indonesia, and we minted 7 new unicorns. So, what are your thoughts on your main takeaways from last year, and where do you think Indonesia is right now in terms of its tech ecosystem?
Yeah, I guess broadly, I think 3 things has happened at a macro level. One, COVID has created a really strong impetus for digitization across consumer, SMEs, governments. Some stats just to put it out there. 60 million new digital consumer came online in the last 2 years, right? 33% of today's digital GMV was actually contributed or made by the 60 million new digital consumer, right? So you can really see Southeast Asian, Indonesian as well, moving from using, handphones and internet as a tool for communication to a tool of commerce, right? So now people are actually really using it to transact. So that's happened. That was a lot of thanks to COVID. I think we're also secondly, we're also seeing government pushing for more digitization to happen, and it's happened much faster because of, again, COVID, and because of what they realized digitization is happening to the region, to Indonesia. With all the policies and frameworks around open banking, open wallet infrastructures, happening at local level, right? So QRIS in Indonesia, Pay Now in Singapore, Pay. So it's all happening at a local level, but I think more exciting for me is also we're seeing the government actually working and sharing for the first time across the region as well, right? So we've seen a lot of governments coming together to think about how can all these local QR payment method, be linked to one another. What are we as a region think about Web3 and how that can, really lift our region as a whole. So that's the second thing that's happened. And then the last thing is, we're really seeing a lot more entrepreneurial ambition that really was missing, in maybe a decade ago, right? Success stories like Bukalapak, Grab, Shopee has really fueled a new generation of entrepreneurs, wanting to start on their own, and what they have that's in addition to what not just ambition, they now also have experience at their training. So I think that's broadly what 3 things that's happened, right? So what does it all mean to Indonesia? I think it's amazingly exciting times for everybody, right? Consumer are more digital, they're ready to spend, government's ready to support the growth and enabling exits. Talent pool is actually a lot more mature than any time in the history. So I continue to believe in Indonesia's potential and ability to just use technology to develop in leaps and bounds going forward. So.
Right. So Sachin, I want to just follow on a bit on what Pinn said about some of the changes that happened in 2021, and I was just curious because we did an interview before, and you talked about how the complexity of Southeast Asia, the regulations are different. I just want to focus on regulation. How did the pandemic change in terms of the government's adaptability to producing more favorable regulation in Indonesia last year? Any thoughts on that?
Look, Andy, I think that based on our experience so far, we've invested in a range of sectors, right? We've invested in B2B commerce, we've invested in wealth management, and in logistics, and so far our experience has been very positive. I think that the policymakers here are are extremely far thinking and are accommodative to disruption and to innovation. So what I can say so far is our experience has been smooth, and we think so governments around the region are do have an innovative and sort of tech mindset when it comes to regulation across sectors.
Okay, actually, how about your experience in last year in the pandemic? I mean, earlier we had a chat that you've been basically in Hong Kong and haven't had the chance to visit the region, right? How do you manage that back and forth?
Yeah, I mean, so been involved in the Southeast Asia venture ecosystem since about 2015 now, and I think the last couple of years, I echo what Pinn has mentioned in particular, right? COVID has definitely been one of the galvanizing forces for the digital ecosystem, and obviously the whole world has for a couple of years was living off of Zoom, and so I think things were navigable. But what was particularly interesting, I think, in the last few years is that a number of digital first companies have really come to the fore. I think a lot of the initial wave of consumer internet champions have built phenomenal ecosystems and huge customer bases, but may not have been entirely product led, more operational and marketing led. And I think we're starting to see a wave of companies that are product first. And that creates a whole new asset class. And it's kind of how ecosystems evolve over time, right? I mean, we started investing in China back in 2005. And till the Alibaba IPO, which served as a very galvanizing event, the value creation from 2005 to 2014 is far less than the value creation that's happened from 2014 to today, right? And I think to your question around what has happened and what it's been like investing remotely in 2021, the simple answer that I can give you is that there's a lot more innovative thinking and execution at play that has allowed for different pockets of capital and ideas to be valued differently, right? So it's definitely, I'm also hoping to get myself down to get out of Hong Kong first, very frankly, and get back into the region. But it's definitely been exciting to continue to monitor and speak to people on a daily basis that are living and breathing this transformation.
Right. So what we noticed as well, I mean, this is coming back to what you said, Akshay, about doing deals remotely. I mean, this partly has correlation with inflow of a lot of foreign funds coming in, right? So last year we heard it was very VCs doing because startups have a long list of investors basically offering higher valuation. We also heard about large global VC rushing into deals. So maybe this question is for Sachin. Can you tell us what was it like for you? Was it as as wild or as competitive as they say last year in terms of securing a deal?
Sure, Andy. So look, last year was an incredibly busy year for tech in Southeast Asia, right? Everything from round sizes to valuations to the speed of doing deals witnessed a significant increase. And given how funds were flushed with liquidity, I think what was interesting is we saw early stage funds doing later stage deals and the more later stage guys moving down the value chain, right? And if we think about it, something like 25 or so of the 40 plus unicorns in the region emerged in 2021, and we finally saw some blockbuster exits, right? So all this made for a very exciting yet challenging environment for investing in the region, right? So for us, it was equally a busy year. We invested across a range of sectors in different countries in Southeast Asia. While being aggressive, we also tried to maintain discipline by sticking to the fundamentals, by taking a thematic approach, which we continue to feel is very important, by backing the highest quality founders, and by investing in businesses that are solving deep societal problems at scale. And there are many of these problems in Southeast Asia, right? And doing all of that while also being cognizant about risk reward, right? Given where, given the sort of macro and environment and how that dovetailed into valuations. So I think for us in a highly competitive environment, it was, important. One big takeaway is that it was important to build early alignment with founders, right? I like to think of the investing process almost as like a marriage. And before you get married, you have the dating process. And, that's when two parties sort of get to know each other well. That's when you are able to sort of build meaningful relationships, build alignment about the future. It's a time for us to demonstrate our investment philosophy, our distinct value add, so that once the deal happens, i.e. once the marriage happens, hopefully it's sort of smooth sailing going forward. So I think I guess the takeaway there is in a highly competitive environment, one sort of differentiating factor can really be building meaningful relationships. And Southeast Asia is a touchy market, and I think those things go a long way.
Right. Interesting, your analogy on marriage, because we heard, this large VC investor securing a deal, they were rushing into it, and then they regret basically going into that marriage. Pinn, maybe this question is for you. Is this what you're getting as well? I mean, were investors rushing into deals last year? What do you think?
I think, it is, I think, factual, right? That there are just a lot more activities, more entrepreneurs, more funds in the region. And, amongst that rush, again, like Sachin, we also try to be very, very focused and disciplined in how we deploy. So as a fund, we're not here to win market share by number of deals, really. So, we have right size our funds. Our fund size is relative to our peer, slightly smaller, just because we size it according to the opportunity set. And, we take very concentrated approach. We have a, founder builder mentality of sort, right? So in order for that to actually happen, each of us cannot be physically invested in 20, 30 companies because we just won't have time for them. And so for all that reasons, we triage deals quite quickly in an environment like this, right? To really hone in on what high impact companies could look like, which founders do we really want to, put essentially really slightly higher amount of money behind in this day and age, and staying focused and disciplined and not have too much FOMO or fear of missing out with all the other deals that's happening around us.
Yeah, there was this VC company, I don't have to mention name. They basically invested in 80 deals last year. So that's like one deal in every 4 days. That's crazy, right? Okay.
Yeah, as a comparison, we did 6. So yeah, and we are all global, so we're all global.
Yeah. Okay. So what's curious about these foreign funds? Just coming back to that topic, is that a lot of these new funds they're focusing on Southeast Asia. They're actually entering early stage instead of the growth stage where there are funding gaps, as we know. So why is that? Why are big investors, foreign investors, going into early stage when the market itself is already quite crowded here? Maybe Akshay, you can take that question.
Yeah, sure. I mean, I'm not, you guys are close to the data. I'm not sure about the distribution skew on a dollar basis, right? But I do think that it's absolutely right? That the number of investors coming into the early stage has dramatically increased, particularly at the Series A and Series B stage. And I think that the reason that is a reflection of the fact that we're still at the early innings of Southeast Asia's ecosystem development. Right. I mean, if you look at we typically think of what makes a tech ecosystem on four vectors, right? The first is consumption behavior, right? Underlying consumption behavior. There has to be a digital economy, digital consumption user base that is actually willing to use tech products. Second vector being talent, right? What is the level of talent? What's the incoming level of talent that's contributing to this ecosystem? Third being capital, capital to fuel these businesses, and then fourth, ultimately exits. Right. I think what, and particularly when I started back in 2015, if I contrast the ecosystem from 2015 to what we've seen in the last few years across those four vectors, it's completely unrecognizable. Right. The level of consumption behavior, the impact that the pandemic has had, not to belabor this point, I know that's a talking point on every panel over these last few days, but the impact that the pandemic has on digitization is just through the roof, right? The first generation of large, unicorns in the space have spawned a new segment of founders that I think are different in a few different ways. First, they've lived both growth at all costs and unit economics world for a lot of these founders. Second is they've also seen successful regional scale in a lot of instances, or unsuccessful regional scale in other instances. And so you have a talent base that's, and I've also started looking more globally, going back to the point about product-led businesses. And then in terms of capital, obviously there's at least in 2021, there has been no scarcity, and exits have continued to fuel this fire. So to come back to your question, right, in terms of why are foreign investors investing in the early stage, my answer to you is that the ecosystem is way more robust than it's ever been, and by orders of magnitude. And we're still at the early innings. And there's a lot more value creation from here, right? Think, again, rough analogy with China, right? The Alibaba IPO being just a very interesting marker back in 2014 of the Chinese tech ecosystem. PDD was only founded in 2015, right? Meituan's got its large capital raise from GA in 2014 around the Alibaba IPO. And so the companies that are Series A and Series B and Series C today are going to be the large, unicorns of tomorrow. So that's my take on it.
Great. Thanks, Akshay, for that. Just want to dig deeper into, the interest of, foreign VCs, global VCs in the region, but particularly in Indonesia. So Sachin, I want to get to you. So recently we did an interview with you, right? When you said there's really no regional playbook that fits all markets in Southeast Asia because it is a highly diverse market and different development stages. But what's your take on Indonesia's investment landscape at the moment, and what sort of opportunities that you look for here?
Yeah, so that's a fully loaded question, right, Andy? So I'm going to try and break it down in a succinct way. I think to start with, and Akshay and Pinn have alluded to this, I think Indonesia presents a compelling consumer-led story, right? It's really a country experiencing growth on growth. You've got the macro and you've got the tech tailwinds, right? On the macro side, it's the fifth most populous country in the world. You have a demographic dividend. You have extremely strong consumer expenditure and whatnot, right? On the tech side, I mean, you have, internet penetration has gone from like 30% in 2015 to like over 80% now. 90% of internet users are using the mobile, with some of the highest internet usage rates in the world. And if you just think of the size of the internet economy, and there are many reports to this, the size of the internet economy has continuously been underestimated, right? So that's on those are on the sort of broad macro and tech tailwinds, right? And then you couple that with the fact that there's so much of low-hanging fruit and market inefficiencies, right? To Akshay's point, in many sectors, you're still very much in the early days, right? Large segments of the population still don't have, consistent access to goods and, primary goods and education and financial services, and that's further exacerbated by poor infrastructure and inefficient supply chains, which makes the country ripe for disruption, right? To a certain extent, you're not even disrupting existing industries, you're creating markets from scratch, right? Which makes it very exciting because you get to influence consumer behavior somewhat. And COVID has been a massive catalyst for that, whether that's in digital payments or in e-commerce or in wealth management and whatnot. And in Indonesia, you have this, topographic challenge of 17,000 islands. And so, you almost have multiple countries in one, right? Because you have the tier 1 cities, you have the tier 2 cities, you have the tier 3 cities, and consumer behavior and access and digital literacy is all very different. So you have these sort of sub economies that you can tap into, right? And on top of that, you now have the second generation of founders. These founders coming from the Gojeks and the Tokopedias and the Grabs and whatnot, who are spotting these opportunities and are tackling them, right? So all in all, I think it's very hard not to be excited. I think to Akshay's point, historically, wave one of commerce in Southeast Asia was more of a land grab, was more sales-led and growth at all costs. But today, you are actually seeing product-led companies get built, and that fundamentally changes the narrative, because at some point, why can't we be an exporter of these products, right? Why can't Southeast Asia be exporting these products? India has done it tremendously well, and in a couple of years, we are 5, 7, 10 years behind markets like China and India, but in a couple of years, we may be able to even export these products outside of the region, right? So I think and my final point would just be that consumers are becoming more discerning, right? Previously, there was a challenge to even adopt, and now people are willing to adopt. And the question is, like, how do you go from providing a horizontal offering to providing more bespoke vertical type offerings as people become more discerning as users, right? So we've invested in a couple of sectors that we feel are ripe for this innovation and disruption. And that's, for example, a space we invested in shipper, in logistics, and some, logistics still amounts to 25% of GDP today. And as we spoke about, you've got massive challenges around the topography and lack of formal addresses and whatnot. We also invested in the digital wealth management space, right? Penetration is so low today. I think only something like 3% or 2% of Indonesians have a wealth management account, while it's such a high saving society, right? 60% of them have their financial wealth locked up in deposits. And the masses have been underserved because the incumbents have typically targeted high net worth individuals. And while the B2C commerce space has proliferated and it's extremely competitive and extremely well defined, we are just seeing the start of B2B commerce, whether it's horizontal, and we invested in a company called Ula, and that's sort of targeting the retail supply chain, and it's targeting to disrupt the 6 million mom and pop stores, and 85% of retail trade flows through these mom and pop stores. And then you've got more sort of vertical B2B commerce within the agri-tech sector, like Aruna, where it's highly fragmented. There are 3 million fishermen today. It's a $30 billion market. And frankly, there's just so much, it's so untapped, and there's so much to do there. So
3 billion? 3 billion, is that domestic and export?
It's 30 billion total production.
30 billion.
Fisheries market, yes. Indonesia is the second largest fisheries producer in the world, which is quite remarkable. But something like 99% of fish produced is still unprocessed, and the sort of the opportunity to drive export channels remains very, very large. So those are some of the plays we have made, Andy. I think we continue to be bullish in other under-penetrated sectors. B2B industrials is one. Things like D2C commerce is another. Retail, SaaS, e-commerce enablement, the whole blue-collar space. That's where we also see, that's where we feel that some interesting plays will emerge sooner rather than later. So sorry for that slight monologue, but there was a lot to cover there. That's our view of Indonesia.
Thanks so much. And just to to just follow on what you said, the shift from B2C to B2B opportunities. Maybe Pinn, can you tell me what sort of B2B opportunities that you're looking for in Indonesia? What kind of startups within this B2B opportunities will be appealing for Lightspeed?
Yeah, I guess we've made a big bet with Ula. We were the first check-in. We were honored to share that board with Sachin. So we definitely, have looked at kind of the more B2B retail space for now. But obviously, there are many other sectors, right? Mobile, automobiles, B2B sales, agri-tech, that splits, input, output, so many ways to cut that, even just that market alone. Fintech, B2B fintech, right? How do we lend to these customers? How do we help SMEs even bank today? So at the end of the day, we think about Southeast Asia, at least for now, the B, still behave a little bit like consumers, right? A lot of them are actually a one-man shop, 10-man shop at best, right? So from that lens, it's how we frame this opportunity set, right? Like if consumers generally, and they are in every parts of the world that we've been, they are the first to digitize, and then small businesses, and then true enterprise, so government become kind of the last sector actually. So for us, we frame it as what are the different businesses that act like solo entrepreneur, small entrepreneur, and how do we help these people digitize, because they have seen the power of digitization, right? They have booked stuff on Grab, they have booked they bought stuff online, kids might be going to school online nowadays, right? So that's kind of the framework that we use to apply to our B2B investments.
Right. So interesting you mentioned about bringing micro and small businesses right into the fold. So we did a study recently on how much like fintech is actually disrupting their businesses. Sure, I mean adoption has been amazing in the past 24 months. But we also look how much is that adoption into e-wallets, e-payments, and other services actually affect their business. So we look into, for instance, like how much they need in terms of working capital, how much they need for running their business, and our calculation. I mean, this is from Bank Indonesia basically. So MSMEs required about 190 billion for the entire year, and the banking sector could only provide 40% of that, right? But when you look at fintech lending, I mean, I think the total outstanding last year was 2 billion only. So there's barely any impact, right? I mean, so what's holding the progress? I mean, there's a lot of hype about the disruption of fintech, but maybe it hasn't happened. Maybe it has. What do you think? What's the bottleneck here?
I can share my point of view. I think the bottleneck about lending is always how to collect, right? It's very easy to give out money. If, anyone will come for cheap money, even expensive money, really, right? Like in an environment where they need growth, they need working capital to grow. The bottleneck is always how do we collect, right? What are the infrastructure or systems or policies that put in place to either be a carrot or a stick for delinquency, right? In the US, you look at that, consumer credit or like individuals credit or business credit information is very transparent, almost a guardrail for anyone to even before they want to be delinquent, think twice, right? Because there's there's a report card that will stay with you in your business forever, right? So that's the first. We talk about collection agencies. There's very professional ways of how these things get done in emerging markets. We're still, we sell the loans to somebody, and hopefully by whatever means that he take to get that money back, right? Whether it's to take back the motorbike on the outside of the house, right? So I mean, I do think infrastructure for credit to really be digitized, we need to see an ecosystem that also mature, and this ecosystem takes time, right? I think it is happening today. I think it's good that all this money is going into first lend, then you'll have money to think about how to collect or how to prevent, and then so it's a hierarchy of of needs and infrastructure that needs to be built.
Right. Are you saying the problem is not in the technology, but more about the ecosystem itself? The
right.
average.
It's not about the technology to distribute. Distribution is easy when you but it's a technology. Maybe it's tech enabled, maybe it's not, right? So I think it's a combination of both, right? It could be an operating, infrastructure, but what are the different other, areas in this ecosystem that needs to also be digitized or also needed innovation in order to really, deliver on the promise of this $140 billion credit that's needed to SMEs today.
Yeah. Thanks for that, Pinn. I want to switch gears a bit to talk about macro trends and how this is going to, affect everyone basically, because we are concerned about everywhere. I think it's a global phenomenon, high inflation, right? I mean, obviously, capital is not going to be the same, not like last year, right? But Indonesia does benefit from commodity super cycle. So although it's going to be good in that sense, but overall the economy is going to be facing with high prices, and this will affect consumers. Akshay, maybe can you shed a light, like how are these factors going to influence maybe your investment thesis for Indonesia? Is it going to change it dramatically?
Yeah, I mean, look, we're long-term investors, right? So near-term macro factors do obviously play an impact in terms of how we look at the forecasts for businesses. But we are here to bet on the long-term vision of the rising Indonesian middle class, and the activity, what's been happening in the markets, will have an impact on it. But I think it's still probably a little bit early to say. There's been press reports. 25% of Indonesia's wheat imports are coming from Ukraine. Obviously, energy prices are going to be a challenge. So there's a lot of near-term, I think, implications. But the one point that I would make in this question is tech is inherently deflationary, right? It makes things cheaper. It makes things cheaper to deliver, to service, to collect, to distribute, and technology is, we're at an inflection point of digital adoption, just because of what the pandemic has caused. I personally am of the view that a lot of the macro factors that we're seeing and any potential impacts to large sectors within Indonesia, like one example just being fertilizer prices, right? There's because of this whole crisis, fertilizers all come under urea-based fertilizers obviously come under huge strain. Though that will actually force large verticals of the economy to digitize faster, and that's what we saw during the pandemic. That's what we're also betting on. So I think Sachin and Pinn both mentioned, right, the consumer opportunity is huge, and there may be near-term impact to consumer discretionary spend. However, industrial sectors haven't seen the type of digitization that we've seen in other places in the world, and the like Pinn mentioned, right, inputs, outputs. There's $150 billion between those segments that are operating incredibly traditionally. And the other thing that's interesting about that AI report that you mentioned, right? I think we spent some time looking at that report in particular. The one thing that it doesn't necessarily capture is informal credit, right? So this is another. There's so much informal trade credit that is happening to facilitate a lot of the current sectors that we're seeing. And while there will be an impact from all the macro factors, it further, at least in my view, solidifies the opportunity for embedded finance to provide meaningful value to some of these industrial sectors. So a little long way of answering your question, but the short answer is that it doesn't really impact the long-term vision of the Indonesian economy.
Fingers crossed. Thanks, Akshay. Sachin, obviously there's going to be a rebalancing of portfolio, right, because of what's going on right now. Whether that be monetary tightening or the war. So how's that going to affect funding for Southeast Asia and Indonesia?
Sure. So I think our views are very much aligned to that of what Akshay just alluded to. I think one, Andy, if you take even just a 5-year view, right? These tech and digitization trends are irreversible and are only going to get stronger and stronger. People are going to learn more online. People are going to work more online. People are going to bank more online. People are going to consume more content online, right? So these trends are somewhat irreversible, right? So I think across many sectors that we've alluded to, you're going to see a whole bunch of innovation and startups emerge from there, right? Now, market sort of fluctuations and the changing macro environment is certainly something that we stay close to as investors, but we do take a 10, 20, 30-year view when we are investing. So we are less impulsive around short-term fluctuations. We are more driven by long-term fundamentals, right? And so we try to sort of bring patient long-term capital. And on the flip side, I think if there is a bit of a cycle and there is a bit of a downturn, what that will do is it will just spur it will spur a bit of a cleanup. It will end up more discipline and frugality, not just with founders but also investors. And I think it will be a time when you'll see the true winners define themselves and emerge, and there may be some that don't survive. And this will be a time when it will be more about quality versus quantity, and you will actually see high quality innovation that is spurred, right? Because if the funding environment, and it's hard to predict how the funding environment will pan out, but if there is a squeeze, a short-term squeeze in the funding environment, it just means the bar to funding will be higher. And that means that, you will have to, innovation will need to be deeper. You will need to have, elements of product market fit, and, you need to have elements of real traction before you can go to the market and raise capital. And that may not necessarily be a bad thing, but it doesn't affect our commitment or our thesis about the region in any way.
Right. Thanks, Sachin. So this is partly, part and parcel with the changing macro landscape, right? I mean, we're entering a bearish territory for tech stocks. Indonesia just had the largest IPO, the 1.5 billion Bukalapak IPO, right? But you all know that the stock price has come down like 75%, right? And it's going down. We don't know how low it can go, right? So Pinn, this question is for you. Like, what does this say about tech IPOs in Indonesia, and how does this influence the outlook? Do you think companies will wait for more better times? And yeah, what's your thought on that?
Sorry, what's the question for me?
The question, Pinn?
Sorry, you were breaking up just a little. Yeah.
Was I breaking up?
Yeah, just a little bit for me. Yeah.
Okay, so I was asking you about the Bukalapak IPO, how the stock price has performed, right? How do you think this will affect the outlook for IPO in Indonesia? What does that mean for exit opportunities in Indonesia? What do you think?
Right. Got it. Obviously, I think stock prices is a point in time conversation, right? If you had spoken to us, 6 months ago, I think we will be having a very different conversation, right? So for me, I think stock prices is a very point in time conversation, which I'm not here to, which has a lot of factors, right? The macro environment, COVID, there's so many things that goes into a certain stock price, liquidity of markets, whatever, right? But for me, it's a point in time conversation that I don't know how, I tend to feel like it's not as relevant to the venture ecosystem, right? If we take a long-term view, if you think innovation is here to stay, if we think tech is going to disrupt, businesses, then I think the right question to ask here was, was there been exits in the first place, right? And if there was, then we can all both agree that there's money to be made in entrepreneurship in tech, right? So that's my personal take. I do think it is still an optimistic sign that we have exits at all, right? Blockbuster exits that many people have been waiting for years, right? The fact that Shopee is out there, Grab is out there, Bukalapak is out there, and there's so many more in the pipeline that continues to be on schedule. I think it's a very optimistic sign for the ecosystem, right? What I think, but now I guess if you really want me to address the point of the stock price tanking, I think it's also a question of valuation expectation, right? I think why are we surprised at all? Like going that the IPO will not do as well or where it is today when everyone is talking about froth in the market, even many rounds before, right? I think it is a good lesson for all of us that the public market at the end of the day do not pay for growth at all costs. I think just to borrow Akshay's words, right? Public market do not pay for growth at all costs. Maybe it's a question for founders, right? Do you take high valuation now and then kind of suffer later? Or do you you raise sustainably and think about how your business can grow into that valuation? Because we're always raising faster, a few steps faster than where our business is today. So I think that's a question, right, for individual founders. I think it's also a question for government and regulators with regards to how they think about support that they need for this, startups or yet to be profitable businesses to perform in the market, right? Like, is there, should there be more done to support these businesses when they're out in the market? Should there be more scrutiny on what prices they should be even allowed to list at in order to protect retail investors, right? So I think there's also a question of financial market readiness and how do we boost that, for this, for potentially more successful exits in the future. But again, I think I go back to what Sachin and Akshay's point, right? If we are here long term, if we believe in tech businesses, then stock prices, they're all point in time conversation as long as we're up and down, but we're generally trending upward to the right. I think it's really good reason to be optimistic and excited about the region in Indonesia.
Great. Thanks for that, Pinn. So we're 2 minutes away, but I just want to accommodate a question from the audience. So the question is, the proportion of startups that have regional presence is still very small in the overall number of local companies. Despite being the biggest economy in Southeast Asia, can Indonesian startups continue to bank on the local market only? Sachin, maybe you can take that.
Yeah, sure. Look, I think that's a good question. Southeast Asia is not a homogeneous market, right? It's 10 member states, very diverse, be it cultures, language, politically, infrastructure development, economic development, and whatnot. I think you have seen some success stories of this, with the likes of Sea and Grab and Ninja Van and whatnot. And other business models are probably more skewed towards becoming domestic champions. And I think for a lot of the startups in Indonesia today, there is still, they are just scratching the surface in terms of market share. There's still so much to do in Indonesia. There's so much to prove out there. And until they do, only then you will expect them to sort of expand regionally, because otherwise you'll just be spreading yourself too thin. So I think, I think that the region will continue to integrate. We will certainly see more regional champions emerge, but the domestic opportunities today are equally as compelling and are equally as early. I think for many of the startups today, it's focusing on winning in your backyard before expanding into another country.
Okay, thanks. One more question from the audience. How prepared are tech unicorns, growth stage firms to taking valuation cuts given the market corrections we've seen in the tech sector? Have these conversations happened yet? Akshay, can you take that?
Well, I think, to pin in Sachin's points here, right? The companies are growing, right? I think this will be a challenging environment, and there's a number of factors that will determine, fundraising decisions. But I do think that one of the positive things out of 2021 is that many companies are very well capitalized, and so there's a lot of runway for players to prove out their growth. And so I personally am not privy to many of these conversations, or if they've been happening, but that's my general comment here. We've got time.
Great. Okay, gentlemen, thank you so much for your time. Pinn, thank you so much. Sachin, Akshay, I hope we can take this conversation offline someday.
Thank you
so much.
Thank you.
Thank
you
you.
guys.
Thank you, guys. Say cheese.
Thank you. Bye-bye.